Join us now with more on the report. Jessica Reif Ehrlich, BofA, Securities Senior U.S. Media and Entertainment Analyst. That was above even the whisper numbers, would you say, Jessica, for the additions?
It was well above anybody's numbers. Yes, it's true. Like, even though we don't usually hear the whisper numbers, I think they weren't north of 9 million. So 13 million really blew past almost basically everybody's numbers.
It makes me, and I've thought this for a while, I know the streaming business is tough, I know there's cord cutting, but people still love sitting in front of a big screen TV, and that's how we spend a lot of our leisure time. So they just got to figure this out, and maybe that's part of what we're talking about here. What else? You think the WWE, I guess that's one part of an answer for Netflix's content issues. It's not, it doesn't do it for me, Jessica.
Okay, but that is not until 2025. So we still have over a year for that. Look, what drives Netflix is engagement. Netflix is like the old cable pay TV bundle. There's something for everyone. It's the go-to. You turn on your screen, whether it's a television or a mobile device, and the first place most of us go is to Netflix. There's 260 million subs, but they believe the TAM is north of 500 million. So there's still a long runway. The drivers are, yes, in the case of Raw, there are passionate fans. It's year-round programming. As they said last night, which I totally agree with, it's sports entertainment. So there's an entertainment component to this. It's not necessarily a sport, but it's a global entertainment sport or global programming, and they can grow this internationally in many countries. And it's like year-round programming. But there's so much more to it. So if you think about the growth drivers for Netflix, it's not just subs. As you mentioned, price is one lever that they can pull. But in our view, the most important thing is the advertising tier. They are just starting. And this is a 3 to 5 year, if not a 10-year runway. When you think about where has advertising gone in the last few years, it's moved away from linear television to digital. And, brands go where eyeballs go, and the eyeballs are on Netflix, and they're just starting. So advertising doesn't even matter right now for Netflix in terms of its numbers. But as they scale and as they grow and as they learn the business, this is going to be a giant driver. And I'm sure that most of us have not modeled this correctly as they scale up.
What they're going to be able to do in terms of monetizing things, because they can just sort of lay in wait and keep adding subscribers, and there will be a time where they can do things with advertising or even with other pricing that's going to be inelastic, and people are going to say, I'll pay up.
Well, it's actually very interesting. For one thing, they're pricing it to push new consumers onto the advertising tier. So, it's would you rather pay almost $7 or $17 to get 4 to 5 minutes of advertising? So it's not a lot.
But it's more valuable to them, right? If you're an advertising subscriber, I've heard that they can make maybe $20 for the advertising subs.
Well, exactly. So what we call ARPU, they say ARM, but basically the revenue per sub with a small subscription plus advertising is even more. But what's interesting, we're so used to watching 15 minutes plus of ads. It's an uncluttered advertising environment. It will be targeted, so it's more interesting to you, to me, Becky, to Joe. So because it's something relevant for us.
And they have the little circle, and I know. Wait a minute, I only got a minute and a half left. Instead of, where there's certain times on regular TV where you're watching, it's like they even come back for a second and then go away again, and that's bad. I mean, a minute and a half I can do standing on my head. But,
hey, Jessica, question for you though. Excuse me.
Here
about sports, and I know they've said they don't really ever want to get into sports, and this is not really sports and all of that, but at some point, given their size and scale, I would think that leagues would actually want to be in business with them. For a very long time, leagues didn't want to be on streamers because they didn't have the reach, right? If you were the NFL, you needed to be on linear TV because you needed the scale, the reach of, really being able to get out there, in large part because of sponsors and because of the entire ecosystem that you're trying to build around it. But at some point, does it get to, and I think Netflix is the only one that truly has that scale, and could they ever add either additional sports tiers or other things. Do you ever see that? And you don't think that this is sort of a indication that they might one day go in that direction?
Well, with Netflix, you never say never. They said they weren't getting into ads. We know they're in ads. They said no sports. They're in sports. But this is, in this case, it's a 10-year deal with Raw, and they have 5 years they can back out. It expands, and it's a fixed price. With the major leagues, whether you're talking about NFL or NBA, it's not that Netflix doesn't have the platform. Of course they do, and they're doing much more with live. It's at what cost? And they have, they said they're not anti-sports, they're pro-profits. And that's kind of the bottom line. So, yes, they might get into sports, but at this point, media rights are really way too expensive. Our view is that they're probably peaking anyway. The NBA is the last big one. And then if sports rights come down, if there's a more interesting model, then we could imagine a day when Netflix is involved. But just as an example, when we were talking about advertising a second ago, they're approaching this in a very innovative way. So they're offering advertisers a chance to go into the top 10 shows. So you know that there will be massive reach. Or to follow a consumer, a viewer, from Bridgerton to Stranger Things, because you know what somebody's watching and you can follow them as a brand with different ads and approach them that way. So if there's an innovative way to do it that's cost efficient, of course, we wouldn't rule that out.